I would like to now introduce your speaker for today, Chrys Lemon. Chrys Lemon is a partner in McIntyre & Lemon, PLLC in Washington, D.C. He specializes in financial services law, particularly related to marketing of consumer financial products and services, privacy law, insurance law, and regulation of financial institutions by the Consumer Financial Protection Bureau. Chrys, welcome to the program. We are now ready to begin.
Hello, everyone. We're going to focus on two areas today, and they're important because these requirements I'll be discussing, nearly all of them go into effect on this Thursday, April 19th. We'll talk about successors and interest. There's some new requirements with respect to how you handle successors and interest as to certain information requests that you receive and when you are notified of a successor and interest. The second half of the program, we'll talk about the periodic statement requirements in the mortgage servicing rules and how they affect the situation when you have a debtor in bankruptcy. We'll talk about three different themes. I'll call them three lessons in that section. We'll talk about a complete exemption from the requirement to provide a periodic statement for certain debtors in bankruptcy, then a partial exemption for other debtors in bankruptcy, and then some transition rules as to what you do when you have someone moving between different phases. Either they're a bankrupt, that there's a complete exemption, and then that changes so that there's only a partial exemption. So we'll focus on that as well. Everyone should have access on the website to both these slides and also another handout in a PDF file called Periodic Statements in Bankruptcy Situations on our letterhead, McIntyre & Lemon. If you do not have that available and you can't do that, go ahead and put a note on the chat function, and we will try to go ahead and get you that handout. We won't need it until the second half of the program. Before we get into both of these issues, I want to talk about small servicers. This definition is particularly important with respect to what servicers have to do when responding to an information request that relates to a successor and interest. And it's a typical definition. Basically, if the servicer and any affiliates together service 5,000 or fewer mortgage loans in a year, and in that case, it's all those loans that they're the creditor or the assignee on, then they would be, if they're under that threshold, they would be considered to be a small servicer.